So, the United States election just happened, and a state of euphoria erupted in the US stock market. You're listening to the Investing Mastermind podcast. I'm Michelle Markey.
And I'm Signe Lundholt.
And on today's podcast, we're going to ponder what lies in the future, perhaps, for the US stock market, the US economy, and also the world economy and stock markets, if we want to think a little bit about that, of what implications the US election may have worldwide. And Sina, what do you think about this past week with all the flurry of economic and stock market activity following the election?
Well, to me, it was not a big surprise what happened because usually after a big election, there's an upturn because there's so much positivity. And usually, it's the most popular candidate that actually got the job. So usually there's euphoria in the market after an election. So it didn't come as a surprise to me. I know that in the past there's been stories about how people voted against the stock market whenever a certain candidate won the election. But actually, what history shows is this euphoria right after the election. So it wasn't a big surprise to me. It's not like before the election that I jumped into any stocks or in any way calculated. I'm the boring, good old Buffett investor who does not care about an election and short-term market. So for me, it wasn't a big deal, but I talk to people almost every single day and get their perspective. And it's so interesting about how many people before the election were speculating about, ooh, if it's Harris, what will happen? If it's Trump, what is going to happen? And, all these scenarios. And now that we know who the new president is, then people are speculating a lot about what is going to happen and trying to get my opinion on that. So it's definitely something that's going on in people's minds right now when they're speculating, will the stock market go up? Or, here in Denmark, people maybe think that it's going to go only down from now on and things like that. So a lot of speculation going on. How about you
Yeah.
yourself, Michelle?
It looks like a lot of people playing the markets got what they wanted from what it looks like. It has become recently legal to bet on elections. So I think in early October, there were some betting markets that opened up about who would win. And I would see ads looking at wallstreetjournal.com about the interactive broker showing which candidate would win and will this candidate win, yes or no? And based on that, like there were probably some traders who can feel really good about themselves that they bet correctly of the outcome of the election and they made a lot of money. And so some of that I think is going on in the markets of not only an actual betting contract, but then also what some people might refer to as Trump trades. So some of those have been paying off lately for some people. And that's an interesting trend of, okay, like that's interesting that that's in the short term something that happened. But to what you're saying about some people who've been talking with you, what's going to happen more in the long term is what I'm more interested in. And some of the things that could have longer term implications would be the Federal Reserve having cut rates this week by another 25 basis points. So I think in September, they lowered it by that big 50 points. That was a substantial cut. And now the Fed funds rate is down by another 25 points. So gradually, you would think that that should affect a lot of other things that are making things difficult in the economy for people, like when people have loans or credit card rates that are high. Even though it's not a big cut, you would hope that it starts helping a little bit because if the Federal Reserve is cutting rates because they're expecting the US economy to slow down and inflation is down, then it makes sense that interest rates are slowly getting cut because you pump the brakes on all the lending. And so a lot of people and businesses are maxed out on loans and debt that they have on their books. And now it's time to kind of slow things down because that's just kind of the cycles of the economy. You can't always be growing. Sometimes things are slowing down. And that's also the projection for the US GDP is that it had been in the 2 to 3% range this year, but in the coming quarters, it's projected to go below 2% for the US economy. So I think that's going to be an interesting trend that plays out. And there could be some negative things that we see, regardless of who is the president. There are some factors that are out of the president's control, like what's going on in the economy and stock market. So usually what happens in the economy should affect what's going to happen in the stock market in 2025, I would think. What do you think?
Well, I think you're saying some really important things here, and where I see a lot of misconception about economy and things like that, where sometimes, I feel like, okay, there's definitely a lot of people that I can see they think that it's the president, that they might blame a president for high interest rates or things like that, where there's much bigger things at play when it comes to inflation. And I really encourage, if you want to know more about economic policy, there's a great book by Paul Volcker, who is a past Federal Reserve chair. And I believe it's called Getting at It, or I'm actually not sure about the title, but we can write that in the show notes. But it's an amazing book actually explaining in a high inflationary environment what is the job of the Federal Reserve. And in my opinion, now we don't know the whole history yet, but I really think that Jerome Powell has done an amazing job controlling inflation and not letting it spin completely out of control like it in the 1980s. I think it's amazing from my perspective what he's done. But then again, I of course don't know everything what goes on behind the curtain. But from my opinion, I really think he did an amazing job in the United States in trying to do what needed to be done with the policy at that time. It's interesting to follow along some of those things, and also what you mentioned is what is going to happen with certain things. And of course, there's a new president coming in and there's focus on certain sectors that might be impacted. As far as I can hear, he's going to focus more on production of oil and less focus on what we would call sustainable business models or energy models. So it's going to be interesting. And you can already see in the stock market that certain sectors got that boost. But again, it was the stock and not necessarily the individual business. And we are very focused on those individual businesses rather than necessarily macroeconomics. And what we can see right now is just kind of, again, a rush into what people are trying to predict will be popular in the future, even though, we don't quite know yet. So yeah, that's kind of interesting. Did you see any kind of trends or anything happening, Michelle, that you thought was interesting?
Well, only insofar as like the market overall seemed to be up, but just as it's going up, it's giving some people pause. Like even before the election outcome, we saw Berkshire Hathaway sell even more Apple and Bank of America, and they sold something to the tune of $36 billion in the summer, and they only bought $1.5 billion of stock. So that's showing that Berkshire Hathaway is very bearish about what could be coming in the stock market. So it's somewhat opposite land. Like you see the best investor in the world, Warren Buffett, selling just as other people are buying. So could we be nearing a top of this is somewhat of a tricky place that we're in, like a twilight zone of just a detachment to reality. Like the valuations of the stock market are getting as high as they almost ever were. Like when I looked at the Shiller PE the other day, the Shiller PE was at 36. And in October 2021, just 3 years ago, it was at 38. So it's not that far off. And the all-time, I think back in the dot-com bust was like over 40. But we're getting back to a point of falling off a cliff again. And I think that's what Berkshire Hathaway seems to be telegraphing, is that they'd rather have $325 billion of cash than even stay invested in the best company in the world, according to Buffett, which was Apple. So he's saying he'd rather sell 100 million shares of Apple than stay invested. And they only have 300 million shares left. I mentioned this in my little solo podcast in the previous episode, but it's very telling when even the best investor doesn't want to stay as invested right now in the stock market. So I think that's a reflection of kind of what could be happening in the economy if, like, what usually happens in the economic cycle is things get a little overheated. Like there was a lot of growth and there was a lot of stock market bubbling up. And then suddenly, when the economic cycle starts slowing down, like the businesses realize they're not producing as much profits and they're racking up more debt, but it's not yielding profits as a business would hope, then you know what that usually means is people get laid off or whatever happens, that people lose their jobs. And then companies also try to start doing cost cutting and focus on paying off their debt rather than focus on growing the company. And then, in theory, if that all shows up in the financial statements, then investors should realize that a company is earning much less, or they're projecting to have less profits and less sales in the coming quarters. So then, naturally, the stock price should go down based on the economic fundamentals. But we're not seeing that yet play out. So I think we're going to see it more in 2025, that it doesn't matter who is president ultimately. If the economy and the stock market are meant to go down, unfortunately, that's just where it could be in the cycle.
Yeah, absolutely. And yeah, it's going to be interesting, right? Because all of us who are following Warren Buffett, we're looking and thinking, okay, he keeps selling, he keeps selling. What is going on? Does he know anything that we don't know? And we've seen from time to time where he made moves, like when he sold airlines right before Corona crisis, where it was like, did he know something was going down? Like how come he chose that time to sell the airlines? And he took a hit for that, but we've seen from time to time, it's as if he does know a thing or two that's going on. And even before the 2008 crash, he did warn about some of the derivatives and weapons of mass destruction, as he called it back then. So I'm kind of looking forward to what he's going to say. I know it's not going to be until May that we're going to know what is he going to say about the outlook and for the future and for the American economy. Usually he does say that he trusts the American economy and that over time that it does increase. And what is it in the short term, the stock market is I can't remember the saying actually. Or
The
maybe
voting machine and weighing machine. Yeah.
yeah, exactly. So over time, he does believe in the American economy, but something could happen, and where there could be an event where the stock market all of a sudden tumbles. And if that happens, then we are some people that are ready with our money.
Yeah, overall, the economy, even though it was pretty strong because there was a good amount of consumer spending, but yet people are still suffering in the daily grind as a result of the inflation we had related to the pandemic. So I think it's not really so much the dependent on the political offices that we should blame. It's really more of just how the economic cycles play out. Like when you have a worldwide shutdown, the supply chains get disrupted. And then when we try to start all that back up, everything costs more, like when shipping costs went through the roof and everything that had downstream implications of trying to source materials for goods that consumers would buy. And we're still going to feel those effects for the years to come. I don't think we're really going to have much of the likelihood of going back to what it was before the pandemic. Even when I go to some restaurants now, I'm amazed when there's some restaurants that look like they have pre-pandemic pricing. I'm like, wow, like to find a restaurant that's still cheap. It's like surprising, like, oh, this is like what the price was in 2017. And I don't know if they just somehow find a way to source their foods cheaper, but most businesses, I think, have factored in more inflation. And even my beloved Costco, back in September, a 3 pound bag of the Kirkland wild sockeye salmon was only like $35 for that package, and now it went up to $40. I'm like, oh my goodness, that's a huge jump in just 2 months. Like I couldn't believe that even Costco would jump in prices so quickly. And maybe it's because salmon's out of season, but my point is inflation is there regardless of who is in the current presidential office, and it's just still
Yeah,
happening.
100%. And we can feel it here, and we don't have an American president here. We have a Danish prime minister and a king and, and things like that, right? So we're here in Europe, we're feeling it too. despite of who is president in the United States, it's got nothing to do with the president. And I feel there's a misconception there. So I think what you said also, Michelle, is so important. So if you didn't hear it, rewind and go back and listen to what Michelle said, because it is so important to understand that it's got nothing to do with policy. It's the world economy. And yeah, we're feeling it here too. I'm amazed sometimes. Sometimes I'm like, I'm not going to purchase that. That's way too expensive. And then I'm like, I'm gonna go to the other store and actually see what the price is. And I'm like, it's the same price. It's just that expensive now. And just being shocked. And some of the people I'm talking to, and I actually haven't heard that for a very long time, but now people are actually starting to talk about they're worried about their job, keeping their job, that their employer is going to, as you also talked about a little bit earlier, Michelle, but cut jobs. And I have not heard that. But this past week, there's actually a couple of people that said, well, I already heard that they're going to cut some jobs. So I'm a little bit worried about my job situation and maybe want to start investing because, that would secure their future. But I have not heard that for a very, very long time. And people are actually saying that to me now that, oh my goodness, things are changing. So just like you said, we might actually be able to see something in 2025. Again, it's like rings in the water, and we will see different things happening over the next couple of years, which are implications of COVID. Still, it takes time.
Yeah. And the other possibility is if we don't have a recession or stock market crash, maybe the stock market just keeps inflating in spite of the economy maybe suffering and growing less. But that mismatch can't last forever. So, like for the foreseeable future, it's possible that into 2025, the stock market just keeps going up and up and up, and companies are just super overvalued, and that could be a possible reality. But someday it can't last forever. Sometimes reality sinks in sooner than later, and that's just the way the cookie crumbles. So you hope for the best, but we prepare for the worst in kind of what we're going to tee up for another future episode of looking ahead, setting financial goals. So with that, any last words, Signe, for today?
Maybe what I want to say is that continue to focus on individual businesses. Don't worry about such a short-term event as getting a new president in the United States. Continue to be due diligent in doing your fundamental analysis of the company and things like that. And then, yeah, don't focus on short-term swings of the stock market. So that's what I want to end the episode with. So we'll be back on Tuesday.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.